Welcome back to my channel, the Religious Investors Forum, where we talk about developments in the stock market and where we give good advice about how to navigate the terrains of the dynamics of the stock market with a view to becoming a profitable investor. So in today's video, I want to reconnect with you and touch base with you on a very, very major topic. The topic is about who made money in the stock market in the past 2-3 years, and who will make money in the next 2-3 years without necessarily predicting, but reading the handwriting on the wall and looking at all the projections and all the information that's available about the dimension or the trend or the direction of the market. So for that reason, it's really, really a very, very important topic, and I want you to pay very close attention. And then we will conclude with some reflections from the scripture. So let's try to answer the first question, the first question of this topic. Who made money in the past 3 or 2 years? We know that the past 2 years has been a period of quantitative tightening, where money was being squeezed out of the market, and that's almost has ended now, because tomorrow or in the next 1 or 2 days in this month of September, around 18th or 19th, the Fed is expected to start to announce the beginning of a period of quantitative easing, whereby interest rates come to be cut at a certain percentage on a gradual motion. So who are those people that actually made money at that difficult time, when money was being squeezed out and interest rates were being raised at a level that was never seen before, for the past maybe 30 or 40 years. So I would say that those who made the money, I put them in 3 categories. The first one were the people that traded treasury bills, or traded bonds, or traded what's called yields. We have explained that the stock market is a combination of the bond market, the money market, and the stocks as well. So those that avoided much interaction, much trading, or much investing, or pouring their money into stocks, and took their money and diverted their money to buying treasury bills, whether it is the 10-year or the 2-year. And as a matter of fact, during that period, they were buying shorter term bills, because the yield will come much quickly and will come in a big way. So one category of the people that made money were the people that traded treasury bills, or traded any of those, a variety of it that's in the money market. The second category of the people that made money in the past 2-3 years will be the people, these are experts, these are very knowledgeable people about the market, those who short the market, those who shorted the market at that difficult time, at the time when market was down, they made a lot of money. And if you are familiar with the stock market education and the big names in the investment or trading world, you know about people who made a lot of money through shorting the market. And what does that mean? It's like you predict or you bet on the market going down, and you put your money on those assets where when they go down, you make a lot of money. And that happened for, there are big names in that category. So those who shorted the market during the past 2-3 years, and they were careful and they shorted the right stocks or the right companies, they made a lot of money. You remember that the majority of our big companies, tech companies specifically, like Tesla, they went down during this period. Amazon went down during this period. Meta went down during that period. You remember the video that I made about Meta when the stock was being sold for, I think, between $80 and $100, and it's now selling for about $500. So those who saw it coming, those who saw the fall in the stock market in prices coming, and they betted against it, they actually made money. And so I'm not going to go into too much details with respect to my own instructors who are very smart about that and made money through doing that. There's one particular of them, like Chris Sen. He follows the SPY, the S&P 500, every step of the way. Every step, every move that he makes up and down, he puts a call or a put, and he makes money. And we're learning to do that, but we're not ready to do it because of the constraints that are there for us. We don't know. We're still studying the religious implications or the legality of all these things, as well as the technique, the right technique, because it's very surefire way to lose money if you do it the wrong way, or you do it if you don't know what you do. So that's the second category. But the third category of the people that actually made money, this is going to be very interesting, because the recessionary atmosphere that we just underwent came again with a breakthrough in our technological advancement or invention. So it coincided with the breakthrough in the semiconductor industry and in the artificial intelligence equipment and everything that pertains to that. So even if there was there was a quantitative tightening going on and a recessionary mode pervading, the breakthrough, the technological breakthrough, is always a big market mover. And so even though we were in that situation, the breakthrough in the invention of the chat GPT by Microsoft, and the invention of advanced chips by NVIDIA, and all of these things kind of created a new revolutionary breakthrough that could have propped the market up, and that's exactly what happened. And so those who made the the big money during that period were the leaders of the new advanced technology or the revolutionary breakthrough that happened in the. So those are the people that made money. Let's look at the people that lost money quickly before we go into some other types of direction of analysis. Those who lost money, I'm going to be very brief about this. The first category of the people that lost money were the retail investors. I'm a retail investor, unfortunately or unfortunately, but I'm a retail investor in the sense that I'm learning, and I'm being patient. Even to be patient itself requires learning. It's only when you have people who tell you that this game is a game of patience. This game is a game of time, and this game is a game of all of these things. As you learn to be patient. So the retail investors who rush into the market at the peak of the period of easy money, at the peak of the period when money was easily borrowed, and when the interest rate was almost zero, and when the money given to all of us from the COVID incident, and all of this money that were flowing, and they pumped this money into on the stocks, and as soon as that, they were the stock prices were rising, all these other things set in, and then things began to go down, and then the majority of them left the market with incurred a lot of big losses because they bought at the peak and they were selling at loss. Whereas stock market education let us know that you don't buy at the peak. If you buy at the peak, you have to wait, you have to be patient, and because stock price doesn't keep going back up. They prices retrace, and a lot of things happens along the way. So the first category of the people that lost money that we need to emphasize here are the retail investors. But these retail investors, they will come back. They will come back when the situation reverses, and that's one category of the people that lost money. Who has lost money in the stock market in the past 2-3 years? Well, these are not individuals, these are companies, and as a result of this, the people that invested in those companies. The first category of the companies that lost a lot of money in their stock price, because losing money needs to be understood carefully. Losing money sometimes might be paper loss. for individuals, and they can convert it to, and they convert that loss to gain through the accepted and established procedures and steps. But there's also the real loss, which is you buy high, you sell low, and you are forced to or whatever. So, but the companies themselves, their stock price goes down when the company says it's is being squeezed financially. I mean, say for example, the rate that they are paying for borrowing money for their operations become increased, or the market direction shifted, and momentum, they run out of momentum, and all kind of things. So their stock price will go down. But in most cases, it may not be that the company itself has gone down. That's it, because there's a gap of a wide gap of a gulf between the stock price sometimes and the performance of the specific company. So, but you as an investor in the company, all that matters for you is the price of the stock, and if the price of stock keeps going down, you are at a loss, and especially if you are not able to convert that paper loss and not to keep that paper loss until you are able to dollar cost average into it. I'm going to see if I have time to explain how we do that in the practical field. So that's another. So majority of the companies like that lost money, and I mean lost money technically. They are either they really lost money, they lost operations because they were not able to. Their operations became unsustainable because of the heavy borrowing that the company is involved in, or they just get squeezed and therefore the stock price drop, but not necessarily. The company keeps doing the good work that they're doing, and you're going to see things take a new turn around sooner or later. So, but the last category of the companies that lost money that we must talk about are the startups. The newly started companies in the majority of operations and activities, and many of us would like to invest in that. And I actually have what we might call a large portfolio of startups. The reason is because the startups, their stock price comes looks very cheap, and also because they inspire they inspire you. So see, say for example, remember the time we never knew about electric vehicle, and you see that a company is making a headway in that. I mean, I'm not talking about Tesla necessarily, or at the time when you don't have the solar energy, you don't have the wind energy, we don't have this kind of new energy, or we don't have all kind of new things, new innovations. Companies that are working in that, they have appeal for the majority of us that are young people and also because we want to ride with the new, and also because their stock price is more affordable for us, even though how we estimate a stock price to be cheap or to be pricey is sometimes it conflicts with what the reality is actually about, because the stocks that selling at a higher price, but they are stocks of companies that are, first of all, they are established companies, the companies that have been around for a long time, like what you call like Walmart, or like Target, or like the behemoths like Amazon and any of these other companies. Even if their stock price is like a couple of tens of dollars, and they say okay because you can dollar cost average into them. So I'm going to come back to that some other time. So let's talk about the companies that will make money in the next 2 to 3 years, and the people that will make money in the next 2 to 3 years. The first category that I want to share, that I'm looking from what I'm reading now from the projections and from my learning, they are the leaders in the new technological invention, the leaders in the semiconductor industry, and the leaders in the artificial intelligence equipment and apparatus and all those kind of things. Because first of all, these people, they are going to redraw the line or the direction of investment or the direction of our technology. So what I mean by that is that companies that are involved in those things, they're going to be they're already they're going to be relevant, more than relevant, necessary for the behemoths, for companies like Meta, or companies like Amazon, or companies like Netflix, or companies, any of those members of the Magnificent Seven, except the so even including Tesla, companies that are advanced, that are producing advanced chips, like and right now Nvidia is the absolute leader in that field, followed by maybe Apple, and followed by Microsoft. Microsoft is making a lot of leaps in this direction, and it's actually probably the leader. So though that leadership is contested between Nvidia, Microsoft, and Apple, but right now Nvidia is the absolute, is the number one, is the king. And the reason why they will make money is because even these other behemoths, they will be able to invest or buy their products. Not invest, they need to buy their products in order to improve their operations and keep their leadership. So Amazon will need the chips produced by Nvidia, Meta will need it, and these are the companies that have huge money to buy it. They're buying it in billions, in tens of billions, if not hundreds of billions. So investing along that line now is almost like a surefire way to make money in the next 2 to 3 years, God willing. So, and before I move on from that, it doesn't really matter what the stock price, what it is now. What's important is that this is where money is likely to be made, and there are trading platforms that allow you to buy fractional shares. Say, for example, Nvidia stock rose from whatever it rose to about 1,000 or so, and then they had a stock split that brought it to about 120. But you don't have to even have $110 or whatever amount is sold now. If you have $20 only, you can buy a fractional share of Nvidia on majority of the platforms. I'm not necessarily recommending anyone. So riding with the best and the strongest, especially in the new invention and the new technological invention of the semiconductor and artificial intelligence, is very sure way. So I'm going to be very brief about the rest of this. The other people or companies that are likely to make money in the next 2 to 3 years are the companies that are having a sigh of relief from the burden of debt. They are not really debt-ridden, but they are scared because of the tightening. But right now that the tightening is being reversed, they have a sigh of relief, and they're relaxing, and that's going to reflect in their companies. And this has to do with mostly mid-cap companies, as well as some of the startups that are not so much doing so badly. So the startups that are not debt-ridden, that are beginning to become profitable. Say, for example, look at Palantir, a software company in the artificial. It was introduced to me like in the year 2020 or 2021, but at that time it wasn't a profitable company. But between that time and now, it has doubled or tripled, and right now it's become a profitable company, and it's been admitted or in accepted into the S&P 500. All of this is boosting their version, but what's actually boosting their stock market is the fact that they are becoming a leader in the artificial intelligence stuff. So companies like that will very much likely. And we cannot describe Palantir as a startup. It's like I think it's a mid-cap company now. So in the next video, I will talk more about some of these companies that we can invest in order to reap a good return in the next 2 to 3 years of this. And then the last one that I want to talk is the real estate or the companies or the assets that are loan that are tied to the ability of people to borrow money easily. So the real estate companies, I'm not an investor in any real estate company per se right now. If I would invest, I would probably invest in Zillow or in Lowe's or in Home Depot or in Builder or any of those things. But I have my own reservations about But those companies, they will make money as soon as interest rates started to be cut, which is happening maybe this week, and and the effect will be seen in the next 6 months or 1 or 2 or so. Let me conclude with a reflection from the scripture. The scripture tells us in the chapter of Joseph, Quran chapter 12, verse 49. أعوذ بالله من الشيطان الرجيم ثم يأتي من بعد ذلك عام فيه يغاث الناس وفيه يعصرون. Then thereafter there will come another year when people will again be able to press more wine and press more oil. If you look at the story and all the narrations, all the events in the chapter of Joseph, you see that it talks about different cycles of the economy and which can be applied to the stock market. We can apply to the bull market, to the bear market, to the recession market. But this particular verse says it's not talking about the 7 year or 7-5 year, but it's saying that a year will come after that when people will be able to press wine more and press oil more. The quantitative easing is an artificial way of sending money back into circulation and putting money back into the pocket of the consumers, especially the American consumer, and people who want to borrow money to buy new home, buy new cars, buy new Ford F-150, buy remodel the houses and so on, or pay student loans, all kind of things. As soon as it becomes much easier to borrow, people will spend in the majority of these things. Thank you very much, and I hope that the little that we've shared is of benefit for. Thank you, and see you next time, God willing. Assalamu alaikum.